Okay, let's take a look to see how do we determine which way the market is going to open. It's currently 8:50 Tuesday after the Christmas break. I know I've done some research. I know which way the market's going to open, but I figured, well, I can show you guys how I determine if I'm walking in blind, not sure what's going to happen in the market. How do you look at this to see how the market's going to if it's going to open up high or open up low? Okay, one of the first places I look at is the volatility index. Okay, this is it follows the Chicago Board of Exchange volatility. This is most likely called a fear and greed index. Right? If there's a lot of fear or concern in the market as regards to futures contracts or which way the smart money is going, and the index will rise. If the VIX will actually increase, and the higher this goes, the more pressure that's going to put on the market. Right? It makes more investors are scared, so they're not going to be spending. They may be pulling their money out of the stock market to put it in bonds or anything else. But this, when you see this increasing, so let's take a look at this morning. And yeah, oh my gosh, we had a gap from Friday and it coming into Tuesday. So this is the holiday. This is on Christmas here. It was relatively low, and then when you see it opened up, this is called a gap. This has happened after hours between trading hours. The market sentiment has shifted from they weren't so scared, they weren't so nervous or worried, and when the volatility wasn't there to now, oh yeah, there's a lot. And not only since there's a lot, but it's increasing all the way up to looks like it's going to be increasing into the market open. So you can use your own thinking there to wonder what's going to happen. So this is only one view, and you see my indicators here, the little half trend that we talked about earlier, how it tells you that, oh yeah, this sucker's going to go up. And so you got a red symbol here, tied with the blue, means you can ignore that. Here's your blue confirmation again, letting you know that no, we think the VIX is going to keep going up. Okay. So what does it mean? What's the second place I look for the market strength or market how it's going to open is to look at the Nasdaq futures. This is NQ1. Now it's not a shock to me since we just saw the VIX going one way. We saw the VIX was heading north. Well, when the VIX is heading north, it means Nasdaq futures would comment. So kind of makes sense. If you're going to be betting in the future, if you're looking at futures contracts and you're seeing this volatility and concern, you're you're not going to want to pay too much. So when the VIX goes up in Q1, which is Nasdaq futures, goes down. So if you can imagine, if the Nasdaq futures are dropping like a stone, as they are right here, oh my gosh, right? What's that going to do to the market? Well, and once again, it's confirmed not only by the VIX is telling us this, the Nasdaq futures is telling us to get out, get out. Oh, if I didn't tell you before, get out. So you have the VIX telling you, Nasdaq futures telling you. Now let's look at our favorite Apple, right? Not that I invest in Apple. I mean, I have, and you can, but we talked about ETFs and mutual funds. It would be better for you, but people know Apple, so let's make a video about what people know. Right now, you would think you would think that Apple has got a blue sign here. And last week it was coming out okay, but the 27th here is where we're at, and you can already see some distress. You already see a sell symbol here, and you see this weakening. You see this breakdown of the structure. So what I would do as an investor is, you see we got a red sell signal, and it's got a blue line, but you can see that the market's breaking down. What you do is, in this case, if you were to buy Apple, or if you're looking to wait for the market to open to actually jump into to make a trade on this stock, is you would wait till this condition actually is true. We got a sell symbol, we got a blue line, but you see the blue line is turned to a clear line, and then actually when it falls over here, it'll turn to red, and so this will make this indicator become real. We have this combined with the red sell line, which means you can jump in to sell it. But anyway, guarantee Apple is going to open low. I'm betting it's going to open low, but doesn't matter. I don't trade Apple. I trade my inverse pairs, as we've talked about, ad nauseum, right? I'm thinking this is going to open up high. And hey, when the SQQQ goes up, the market goes down. Which direction is SQQ going? Well, I'm shocked to find that on December 22nd, with the NASDAQ, with the VIX rising, with with the NASDAQ futures falling, I think the market's going to crash. And guess what? SQQQ says it's going to as well. Even confirmed by, got a buy symbol by my half trend, and it's confirmed by my SSL hybrid, right? And it, once again, there's nothing rocket science about this. There's nothing magic secret sauce. You just have to know where to look to find the information. You don't really have to know the why of how all this works. You can dig into it if you're a nerd like me, but explaining it is a challenge. But I can explain it so that you don't have to know it all to understand how it works. And you saw the walkthrough. All right, so we take a look at the VIX, and the VIX, whoo, rising. Okay, simple enough. VIX rising. NASDAQ futures, falling. Geez, I wonder what that's going to do to the market. SQQ. Means it's going to crash. Look at your TQQ. I guess you guess what? Oh yeah. If you didn't already figure this out, the TQQ is complete inverse of the SQQ. So if one's falling, one's rising. So we talked about, I'm not sure if it's in this video and other videos, or how to short a stock or how to short Apple. In this case, you don't have to, right? You don't have to worry about shorting anything. If we think the market was going to go good and we're going to have a Santa Claus rally, then we would see the VIX declining. We would see NASDAQ futures increasing, and then we would see this being posed for a push up instead of a push down. But instead, as the video has already shown, you got a sell symbol here that is ultimately confirmed by this candle here, which means if the market was open, I would probably be placing a trade to when I want to short the TQQQ. What I would do is I'd flip over. I want to short this, so I buy this, right? If I think he's going short, then one's going long. It's a freaking teeter-totter. One's going to go up and one's going to go down. And once you have enough confirmation behind it, you make a decision and you buy it. You can buy one share, you can buy a fractional share. Doesn't matter. Yeah. So I'll get into showing you how to set up a paper trade account so you can trade this without actually spending any real money. But it's super easy. I'll show you just briefly. Just briefly. Paper trading. Okay, we already have it open. Let's say that the market was open. If I do it better with let's say maybe a Bitcoin. Oh yeah, these indicators work the same for cryptocurrency, foreign exchange currencies, as well as stocks and bonds. So very much that when you get let's look at here. Let's look at Bitcoin, which trades 24/7. Got a buy signal here. And you would ignore that buy signal until you get a blue line. Then you would buy, right? You got a blue buy signal, blue line, blue candle, buy it, and you could have made money there, right? Probably this would have maybe taken you out. Now you're out of the trade, and then you wait. I don't know. I'd have to use other indicators to get me to jump back in because that's a sweetheart, right? So this told you to do it. If you would just buy this blindly, well, buy this at the blue line and hold on to it for dear life. Oh, sweet mother, what a rise, right? Told you to get out, right? Yeah, yeah. Probably should have at that point. I'd look at other indicators. I'd have to show you other indicators to show you which way to go. The cryptocurrency it swings a lot. It's a lot more volatile than stocks. It's a bit of a fun ride to play with. I've burned myself too many times with this in the real market that I only use paper trade for it. Only because it's a good extreme. Right? It's a good way to try out your extremes and markets and your indicators and test your gut. Anyway, I digress. That's how you decide how the market opens up, right? This is how you know, gee, my crickets. I mean, as we're just chit-chatting here, look at the strength of the VIX. There is a lot of fear, uncertainty, and doubt coming into this freaking trading day. I wonder what its impact is to the futures market. Well, no freaking shock, is there, right? It's just not rocket science. It's not. Look over here, it's going to impact in the market. Oh, can't wait for that 9:30 bell. Anyway, I hope this content was helpful. This is how you determine which way the market's blowing before you invest and start making your trades. I hope it's very easy. So it's VIX, right? The NQ1. You hope to bring this up so you can see it. The NQ1 dollar sign or exclamation point. Apologize. Super easy to find from TradingView. You just go in here. You can see how it looks in Q1. If you got questions on how to set this stuff up, maybe reach out to me and I can show you. Anyway, hope it was helpful. Have a great trading day.